IDFC FIRST Bank has reported a strong set of numbers. Deposits have grown 43%. I mean, that's a huge growth. Advances as well up over 26%. And most importantly, the net interest margins have risen by almost 40 basis points to 6.36%. To give us more color on how the bank is shaping up, V. Vaidyanathan, Managing Director and CEO of IDFC FIRST Bank, joins us. Mr. Vaidyanathan, good morning. Thank you very much for joining us. And clearly, a lot of numbers are impressive. Let me start with the NIMS itself. 6.36 is obviously a tall number, but now there is the rising pressure of deposit cost. Is this the peak, or can you maintain even in the fourth quarter this kind of margins or better it?
Well, things should stabilize from here. Our business model is constructed somewhere around 6%. I think because of the repo rates that increased recently, we got a bit of a bump up. But we guide for about 6% or a little more than that.
6% for FY24 or for the quarter?
Even for 24, we should be able to sustain it because
sustain 6%.
That's the way our products, because that's how our products are constructed and that's how our lending deposit rates are.
Oh, okay. I wanted to ask you more about your deposit rates, actually. You have a great 43% rise in deposits, but borrowings are also up. Now, what is the difference in cost? What is the average cost of deposits? What's the average cost of borrowings?
Let me just say that our savings rates, for example, blend would probably be about 5 point something, maybe 5.2 or 5.3, because we also pay 4 and we also pay higher slabs. But overall, I'd say that maybe about 5.5% or so.
Okay, so no, I'm asking you that question because will we see progressive replacement of borrowings by deposits, and will that keep a lid on the cost of deposits?
Yes. If you notice, we've been running out, we ran off close to about 25, we had 28,000 crores of high cost bonds at about 8.89%. Maybe 3 years ago. That number has come down to about 18,000 crores. So obviously, we paid off close to about 10,000-12,000 crores. That process will continue. And actually, that's actually accretive to us because obviously replacing them, we're replacing 8.8 at 5.5. It's a positive trade.
Okay, okay. So there is another 18,000 crore that you can reprice lower, which will be...
That's right. And that gives us enough cushion to work with, Okay. If supposing, just to make it up, supposing interest rates in the market went up further and there's a need for deposits, we have that cushion in our hand if we have to. Right now, we have no plans to increase interest rates.
Okay.
But we're already healthy on margin. It gives us enough cushion to touch up the interest rates if required.
So you will not, I mean, a lot of banks are tapping the CD market now. You don't find the need to, for ALM or for whatever reason, to tap the CD market and pay a little higher?
No, we don't need to. Because our deposits coming so strong, Lata. I don't know if you recollect, when that discussion happened in 2018 or early 19, how doubtful people were about our ability to raise deposits. It's coming so thick and strong. In fact, sometimes we have to calm ourselves down. Even employees listening to the program to say not to get complacent and keep it like that. But otherwise, we are very, very happy the way we have goodwill in the market. Somehow there's a lot of goodwill for IDFC FIRST Bank in the market, Lata. Okay.
I guess the Amitabh Bachchan effect is also working, and I suppose the bank is also, executing something well. Yes, actually, the CLSA report is particularly speaking about executing well on liabilities in a tough cycle. That's their words, not mine. Mr. Vaidyanathan, now let me come to the loan side. What do you see as very promising? What kind of growth? Even 26% is a steaming rate of growth of advances. What do you expect in the fourth quarter and FY24?
It's more like 25%, I think, not 26.
Yes.
But let's not quibble about 100 basis points. But the thing is that we feel we always guide that for our kind of business, this is a multi-year, multi-decadal growth. So for us to say 25% right now, we guide for 20 to 25, Lata.
Okay.
The thing is, Lata, that our loan book at about 1,50,000 crores is, believe it or not, less than 1% of India's credit. 1%.
Of course.
So we have really good capabilities, good credit underwriting capabilities, very low NPA. This can go at 20%, 25% for a long time.
Okay. No, but that is the space everyone is competing for. I mean, from SBI to HDFC Bank to ICICI Bank, everyone is competing for retail loans, the space where you are. That's why I'm asking whether, this kind of a rate of growth can be maintained.
Yeah, 2025 is not a big deal. You see, all banks are growing in that zone. So we are not, I can't call ourselves very unique.
Okay.
Because you see, all numbers are coming in that zone.
Yeah, they're coming more at 20. I guess in your case, the base will also be, the banking sector is growing at 17. In fact, the last number was 15. So yes, 25 still looks better. What is the secured and unsecured portion?
So before we come to that, the base for our bank is low, and whether secured or unsecured, base meaning we are maybe 5 years old, other banks are maybe 20, 25, 30 years old, and so on. So with regard to secured and unsecured, Lata, the key thing to understand actually is that India has now developed a very very good guardrails around lending. So whether secured or unsecured, they're all behaving very similar in terms of asset quality. We'll come to asset quality if you have time for that. But let me just talk about the fact that the very key factor that has come in the country is cash flow lending. So literally, you're able to see the money in the bank of the customer, and then you're able to lend against that cash. So so that actually is making a huge difference to asset quality. And that's what we're shooting for.
What you're saying is that even if it is unsecured lending, you're able to see the cash so much that you wouldn't worry.
Yeah, you'll never say we never worry. Of course, you should be very careful.
No, worry less. But still, what is the percentage of unsecured lending?
Let me answer that previous question just a little more, Lata, because it's very important to note. Suppose you're lending to a party, suppose a micro entrepreneur. We are able to look through the bank statement of account in a PDF format for a period of, say, 6 months to 12 months. We're able to see the balance in the account between the 1st to the 5th of the month. So supposing the balance is, say, 10 lakh rupees. Now we know customer can honor, say, 4 lakh rupees as installment. Then you reverse calculate that 4 lakhs, the tenor, and found the. So when you give money to cash in the bank, now cash is also security because the money is trapped in the bank.
Got it.
So think about when we call it unsecured, we should know that it is secured by cash in the bank. It is secured by your ability to pull out money from the bank because it's an installment. You're not waiting for the customer to pay you. You're pulling money from the bank. And thirdly, credit bureaus have become very effective. There are 4 credit bureaus in India, international grade.
Yeah,
so that's also very good security.
Yeah, I'm sorry, I'm trying to hurry you because I've been told I'm out of time. So I just wanted to tell you, your consumer loans is your biggest chunk, 20,000 crore, and you're growing very fast in credit card. In both these cases, you don't have long PDFs annual. So, would you worry about those loans?
No, we absolutely. In credit cards, book is very well. Our gross NPA is very low, net is very low. But in durables, typically tenors are only 9 months. So if there's any problem, we come to know very quickly. Average tenor of a consumer loan is 4 to 5 months. Okay. So the cycle pays back very fast. If there's any problem, you come to know within 4-5 months. Okay. So broadly speaking, Lata, just to keep it simple for your viewers, our SMA, which is really a really good benchmark, which is SMA 1 and 2, as you understand it, 30 DPD and 90 DPD portfolio pre-NPA stage. Yes. That is only 1% now, just 1. So you can just imagine that, there can't be NPA build-up. There's no portfolio in the pre-NPA stage. So we are very comfortable. Your viewers can breathe easy. The bank is doing really well.
Thank you for giving me the number, which would have been my next question, but I was running out of time. Thank you very much, Mr. Vaidyanathan, for joining us with all those important details. That's the word from IDFC. The stock is up about 1% at this point in time. Wrap up on Bazaar, trading ideas on Chartbusters.